Hello everyone, welcome to the June 3rd Wednesday edition of Market Opening Bell, your 10-minute guide to the stock market. The Hang Seng Index opened slightly lower by 3 points on Tuesday before reversing upward. Gains accelerated in the afternoon, expanding by more than 600 points. The index reclaimed the 26,000 point mark and closed near the daily high at 26,038 points, up 640 points or 2.5%. Total market turnover reached 373.7 billion Hong Kong dollars. The Hang Seng Tech Index closed at 5,199 points, up 234 points or 4.7%. The H-share Index closed at 8,762 points, up 255 points or 3%. Southbound funds recorded a net inflow of 2.223 billion Hong Kong dollars into Hong Kong stocks. They net purchased SMIC for $950 million, CNOOC for $383 million, and ECOSO for $344 million. Meanwhile, even as tech stocks rallied collectively, Southbound funds net sold Tencent for $2.109 billion, Xiaomi for $960 million, Meituan for $760 million, Lenovo Group for $328 million, Yangtze Optical Fiber and Cable for $242 million, and Hua Hong Semiconductor for $217 million. According to statistics, Southbound funds have net bought SMIC for 12 consecutive days, totaling $15.9 billion, and have net sold Xiaomi for 4 consecutive days, totaling $1.871 billion. Technically, the Hang Seng Index has surged above its 10-day moving average at 25,500 points, 20-day moving average at 25,865 points, 50-day moving average at 25,734 points, and 250-day moving average at 25,676 points in one go. It is expected to further challenge the 100-day moving average at 26,131 points. On a pullback, the first support level to watch will be the 20-day moving average at 25,865 points. The three major A-share indexes opened higher by 0.1% to 0.9% and then moved individually before all turning positive in the afternoon, closing up between 0.4% and 2.7%. The Shanghai Composite rose 17 points or 0.4% to close at 4,075 points. The Shenzhen Component Index surged 250 points or 1.6% to 15,591 points. The Chinex Index gained 104 points or 2.7% to 4,055 points. Combined turnover for the Shanghai and Shenzhen markets reached 2.79 trillion yuan. The RMB central parity rate against the US dollar was set at 6.8187, down 20 pips from the previous day. Leading tech stocks performed strongly. Tencent was the best performing blue chip stock of the day, closing at $481.6, up 10.5%, marking its largest single-day gain since November 2022. Sources indicated that Tencent is about to launch a WeChat AI Agent for Chinese users, which can help users complete various tasks within the app. The company is currently testing the prototype and plans to initiate the compliance process ahead of an official release as early as this month. Users can access the AI agent chat window by swiping right on the main WeChat interface. Tencent has previously launched 3 flagship agent products targeting individuals, enterprises, and developers, namely QClaw, WorkBuddy, and OpenClaw. It recently also released the operating system level AI assistant Marvis, which comes pre-configured with an AI team of 6 collaborative agents. This includes a main agent that coordinates tasks and dispatches specialized agents for file, computer, app, browser, search, and others to execute in parallel, ready to use right after installation. Tencent is pursuing a dual-track monetization strategy for AI agents, comprehensive ecosystem connection on the consumer side, and precise charging for computing power and tools on the enterprise side. Institutions such as JP Morgan expect that the deep integration of WeChat's ecosystem with AI agents could bring Tencent up to 426 billion yuan in incremental AI-related revenue by 2030. Alibaba rose 6.6% as Tongyi Tianwen released the Quen 3.7 Plus multimodal model. In addition, Tmall 618 first phase saw over 40,000 brands achieve doubled turnover. JD.com rose 6.9% with the number of users placing orders in the first 52 hours of its JD 618 event hitting a record high. Zhipu, which plans to list on the Star Market, rose initially but before falling to close down 3.7%. Minimax fell 5.7% and Sunce also dropped 5.7%. Minimax A-share IPO counseling filing was accepted by the Shanghai Securities Regulatory Bureau. This is the second Hong Kong-listed AI company to start A-share listing counseling this year after Paradigm Intelligence, including Zhipu, which started the process last year. There are now 3 Hong Kong-listed AI companies in the return to A counseling phase. Since last year, in addition to Hong Kong companies returning to A-shares, A-share companies have also been actively listing in Hong Kong, further expanding the A plus H universe. As of June 1st, there were 189 A plus H companies, an increase of 39 from the end of 2024. Of the 39 new additions, 38 were A first and H, and 1 was H first and A. Additionally, Unit 3 Technology completed its IPO in just 73 days. Li Ning announced a long-term partnership with NBA star Stephen Curry and Curry brand to jointly promote the globalization of both brands, starting with basketball and golf and expanding into multiple sports scenarios. According to ESPN, citing sources, Curry signed a 10-year endorsement deal with Li Ning after opening up 4.4%. Li Ning shares reversed to close down 2.8%. This reflected the market's rational reassessment after the initial excitement, focusing on the massive financial cost of the deal, Curry's age, and historically low commercial conversion efficiency. Reports indicate that the 10-year deal is worth at least $300 million with a guaranteed annual endorsement fee of $30 million plus sales royalties and Li Ning equity. Li Ning's mainland China revenue declined 3.5% in 2025 in the current cautious retail environment where consumers prioritize value for money. Such high marketing and revenue expenses have raised concerns among institutional investors about short-term net profit margin erosion. Curry ended his 13-year partnership with Under Armour last October. Industry data shows that in the later period with Under Armour, Curry brand's actual sales had dropped 50% from its peak due to product design and pricing issues, leading Under Armour to terminate the lifetime contract early. This highlights that the Curry's IP's international appeal is facing challenges. Now 38 years old, Curry is entering the twilight of his NBA career, raising market concerns that his popularity and marketability will decline significantly after retirement. The newly listed stock today, Shougang LanzaTech Technology, traded at $30.30 in the grey market yesterday on Philip Mart, representing a premium of 107.5% or $15.70 over the listing price. Excluding fees, each bought lot of 200 shares would yield a paper profit of $3,140. U.S. stocks reached new closing highs again, driven by technology shares. The Dow Jones Industrial Average rose 0.5% to 51,307 points. The S&P 500 edged up 0.1% to 7,609 points, and the Nasdaq Composite slightly increased to 27,093 points. The Fear Index VIX fell 0.28 points or 1.7% to 15.77 points. The Nasdaq China Golden Dragon Index, which tracks Chinese concept stocks, rose 122 points or 1.8% to close at 6,805 points. Most sectors closed higher, led by utilities. The technology sector gained 0.9%, while communication services posted the largest decline. Hewlett-Packard Enterprise shares surged nearly 20%, making it the best performer among S&P 500 constituents. The company raised its full-year guidance and reported fiscal 2026 second quarter results that beat expectations. For the 3 months ended April 30, adjusted earnings per share rose to $0.79 compared with $0.38 in the same period last year, surpassing market expectations of $0.53. Revenue jumped 40% year-over-year to $10.68 billion, exceeding the consensus forecast of $9.78 billion. The company now expects full-year revenue growth of 29% to 33%, up from the previous guidance of 17% to 22%. The market forecast stands at $43.72 billion. For fiscal 2026, the company raised its adjusted earning per share guidance to $3.35 to $3.45 from the prior range of $2.3 to $2.5. The market expects non-GAAP earning per share of $2.92. Marvell Technology shares skyrocketed nearly 33% after reports that NVIDIA CEO Jensen Huang said Marvell could be the next chip company to join the trillion-dollar market cap club. IBM rose 2.8%, although the company's increased investment in quantum computing may take several years to bear fruit. The strategy is viewed as positive in the fast-evolving software environment. Data from the U.S. Bureau of Labor Statistics showed that job openings in April rose to 7.61 million, higher than the expected 6.86 million, and above March's 6.88 million. Job openings represented 4.6% of total employment in April, up from 4.2% in March and 4.3% a year earlier. Although job openings reached a near 2-year high, it does not signal a strong labor market as the hiring rate did not increase. Hiring fell from 5.54 million to 5.12 million in April, with the hiring rate dropping from 3.5% to 3.2%. Our stock pick today is TS Line, stock code 2510. TS Lines primarily provides container shipping services. Its fleet consists of owned and chartered vessels with a focus on the Asia-Pacific regional market, including Greater China, North Asia, Greater China, Southeast Asia, Northeast Asia, Southeast Asia, Asia Oceania, and Asia Indian subcontinent routes. In addition to Asia-Pacific routes, the group also operates Asia to Mexico services as well as Middle East and Red Sea routes. Through joint venture and slot exchange cooperation models, it further expands its market coverage. The group continues to optimize its route portfolio. In 2025, it exited the Trans-Pacific West Coast route and refined its Asian regional route structure to improve vessel utilization efficiency. In response to changes in market demand and supply chain restructuring trends, the group has strengthened its service presence in the Asia, Mexico, Middle East, and Red Sea markets, while flexibly deploying extra sailings during peak seasons to optimize overall capacity allocation. As of the end of 2025, the group operated 46 routes, comprising 11 self-operated routes, 23 joint venture routes, 10 slot exchange routes, and 2 slot purchase routes, calling at 58 ports across approximately 22 countries and regions worldwide. The group's operating fleet totals 41 vessels, including 37 owned ships and 4 chartered vessels, with a total capacity of 109,342 TEU. Additionally, the group has chartered out 4 owned vessels to improve asset utilization efficiency. During 2025, no new vessels were delivered, keeping the fleet size relatively stable. The group enhanced operational flexibility through route adjustments and capacity optimization. In 2025, the group's total capital expenditure amounted to approximately $200 million, primarily for the purchase of 13 new vessels with a combined capacity of about 93,600 TEU. These include 2 vessels of 10,000 TEU, 3 of 14,000 TEU, 6 of 5,300 TEU, and 2 of 2,900 TEU. The new ships are scheduled for delivery between 2026 and 2028. This investment will further optimize the group's vessel type structure, enhance operational flexibility and economies of scale, while ensuring compliance with the latest environmental and regulatory requirements, thereby supporting the group's long-term sustainable development strategy. Recommendation buy price $8.70, target price $9.60, stop loss $8.30. I do not hold the above stock.